I'm Lindsay Taff and I'm Director of Communications here at British International Investment, and I'll be hosting you through this morning's event, which is all about providing you with an overview of the work we've been doing over the last year and offering you the opportunity to ask our CEO and our Chair some questions. This is the first year we'll be presenting our results as British International Investment, and it's also the first year of results from our latest 5-year strategy. The theme for this annual review is investing for a better tomorrow. And the theme really does go to the heart of what we do at British International Investment as a development finance institution. We aim to invest to achieve impact over the long term, helping to provide the economic growth across Africa, parts of Asia and the Caribbean that will help provide citizens in those countries with jobs, goods and services. We're investing to help address the climate crisis, and we're investing to help ensure that as this change and growth happens, it happens as inclusively as possible. So for today's agenda, first up we have our Chair, Diana Layfield, who'll provide her perspective on 2022 and how we and our partners have operated in the face of quite a challenging global and economic context. Diana will then hand over to our CEO, Nick O'Donoghue, who'll provide a more detailed overview of our progress. He'll then be followed by a short speech from our Chief Financial Officer, Carolyn, who'll share our financial results. I'll then return with our Head of Africa and our Head of Asia for a short panel on the view from the countries and the regions where we invest. And then it's back to Nick and Diana with our no questions barred Q&A. And as always, you can ask whatever you like of Nick and Diana, and they will, as far as they can, answer as fully as possible. So please start thinking about what you'd like to ask them and put your questions in the Q&A function at the bottom of the screen. We're delighted to expect well over 500 participants today, so we'll do our very best to get through as many of your questions as possible. And then after the Q&A, I'll be handing over to my colleague, Colin Buckley. He's General Counsel and Head of External Affairs, and he'll host 2 sessions. The first will be a conversation with our Chief Impact Officer, Lloyd, who'll be joined by 2 members of her team, and together they'll be talking about our new approach to achieving impact. And for our final panel, I'm thrilled that Colin will be joined by 3 of our fantastic investees, Moniepoint, Akshayakalpa and Zanaco, 3 very different businesses from very different parts of the world, but who all have a strong shared experience into how their businesses can make a real difference to their local economies and the communities they operate in. So I hope you agree we've got a great agenda for you today, so let's get started. I'm delighted to introduce our chairman, Diana Layfield.
Thank you, Lindsay. Good morning. I want to extend a very warm welcome to all of you for joining us at this annual review. As Lindsay said earlier, please do send in all your questions. Nick and I look forward to answering them later this morning. But before we start the detailed review, I wanted to take the opportunity to reflect on the theme of this year's review, investing for a better tomorrow. It strikes a positive note in what can feel like a time of significant global turmoil and uncertainty. The pandemic, increased conflict, more extreme weather events driven by climate change, and rising costs. All of these things are making life very difficult for businesses and for people in our markets. This organisation turns 75 this year. We were established at the end of the Second World War, when the world felt a very unstable place indeed. But then, as now, people were driven by this to solve problems and build a better future. What came next were serious advantages in areas such as medicines and technology, which have transformed health outcomes and reshaped the way we live for the better. Over the last 7.5 decades, there have been other periods of instability. Throughout these, our job as an investor, an impact investor, has been to continually seek those opportunities to invest to build a better tomorrow. As development investors, there are always 3 areas where we find space for positivity: in our purpose, our partnerships, and our people. I'm proud to chair an organisation with such a strong and consistent purpose over the last 75 years. At BII, we believe that a positive nurturing of the private sector can bring about truly sustainable development, delivering vital goods and services that benefit and improve people's lives. Whilst enduring, the purpose of BII has never been more relevant than today. We're operating in an enormously challenging macroeconomic environment, and this is even more true in the markets in which we invest. A world in which climate change disproportionately affects the most vulnerable, and where conflict in Ukraine creates huge challenges for food supply in Africa. Our current 5-year strategy, of which 2022 marked the first full year, sets a clear expression of our mission and builds on what we've learned. We're investing for productive, sustainable, and inclusive development. I've been pleased to see the progress we've made in delivering on the commitments we set out in our strategy in 2022. On a recent visit to Kenya, I was delighted to meet several of our investee companies, including one called Apollo Agriculture. It's a great example of a business which is helping to achieve all of these objectives of productive, sustainable, and inclusive development. I saw firsthand how we've been able to help over 100,000 smallholder farmers source affordable seed and fertilizer, access up-to-date weather and pest information, and improve their planting and crop yield, more than doubling their productivity to 2.6 times the national average, making a huge difference to their families. BII itself has also faced this challenging operating environment. As you know, we have a dual mandate to achieve development impact while remaining financially robust for the long term. Achieving that kind of impact requires us to take significant risks and act counter-cyclically as an investor. So striking the right balance over the past year has not always been easy, particularly not when the depreciation of sterling has meant there's been less capital available to make those new investments. Against this turbulent backdrop, I was pleased to see that we were able to continue to commit a significant amount of capital to businesses, £1.27 billion in new finance. Today, we have investment relationships with nearly 1,500 businesses across Africa and Asia. Without this network of businesses and the many other organisations we work with, we would not be able to achieve the impact that we do. And that brings me on to my next area of positivity: partnership. First of all, our partnership with our shareholder, the UK government, both in London and across the countries where we invest. This has been our first year operating with a new name, British International Investment. That name and our strategy places us at the centre of British investment partnerships, the UK government's range of economic development policy and programming in developing countries. It's a key way that the UK can collectively support long-term economic transformation in these developing countries. To give you an example, PIDGE and BII worked together to fund one of the very first grid-scale solar battery storage plants in sub-Saharan Africa. Based at Kwamba in northern Mozambique, this project brings clean power to nearly 22,000 consumers and much-needed jobs to the region. We've also been working closely with the UK government on the role that we can play in bringing private sector expertise to support reconstruction in Ukraine. Beyond our shareholder, we're also genuinely grateful for the dedication, passion, and commitment of the wide variety of stakeholders who take an interest in our work and hold us to account. Scrutinising our performance is a crucial part of the accountability mechanism, but most importantly, it helps guide us to better solutions. For example, we've been pleased to engage with Publish What You Fund on their work around DFI transparency. They highlighted where we can and must do better, and I want to thank the Publish What You Fund team for their constructive engagement. We've also recently given evidence to the UK Parliament's International Development Committee inquiry on the UK strategy to DFIs. These challenges are never comfortable, but we welcome them. They are a critical part of how we evolve as a learning organisation. We don't claim to get everything right, and we regularly evaluate our work and draw lessons from those evaluations. This adjustment is important because the context we work in is continually changing. I also want to thank you, our audience, for your continued support, interest, and challenge. And that leads me to my final area of optimism: the people that we work with. The people that work at British International Investment, and the people we partner with through our investments. The passion, expertise, and the energy they bring to solving problems is what makes this such a unique organisation. We essentially have two assets: finance and people, and bringing them together is how we build a better tomorrow. But most critical of all are the people who we want our investments to benefit. Last year, our portfolio continued to provide nearly 1 million jobs and create new jobs at a much higher rate than the wider market, nearly double at 6% versus 3.5%. That success is down to companies like WorldLink, which, as well as providing affordable internet access to some of the most remote parts of Nepal, is also one of the country's largest employers. Our recent investment will help it to create another 1,000 new jobs and provide skills training to the broader workforce. And companies like DBL Group in Bangladesh, who we're supporting to establish a greenfield cotton yarn spinning mill. Once constructed, that mill will create over 1,000 jobs for lower skilled workers in Bangladesh's textile sector, people who are currently far more likely to be living in poverty. And we expect that women will make up more than 50% of that new workforce. In addition to the big numbers of capital invested, electricity generated and carbon avoided, it's this difference to people's lives that underpins BII's mission. I want to end with thanks. Thank you to FCDO, to the staff at BII, to all our partners, and to our CEO, Nick O'Donoghue, for all your hard work and commitment over the past year. Before I pass over to Nick, I want to introduce a short film which provides an overview of the past year.
Good morning, everybody. I'm very pleased to be here to present my 6th annual review as Chief Executive of British International Investment. And so it's my 6th, so that means I joined in 2017. And at that point, we were midway through the first year of what was then our new strategy. And really at the heart of that new strategy was an ambition to really rethink the way we talked about our impact. At the time, we were embarking on a journey to reshape the organization, really to meet a wider set of development goals as articulated by the UN through the SDGs, and a year later by the climate goals in the Paris Agreement. And we wanted to ensure that we embedded those goals in everything that we did, in the selection of our investments, in how we tracked them, in how we measured them, and how we reported them. And also, I think we wanted to think differently about how we worked with companies and funds after we invested in them to help ensure that they could deliver on those objectives. And so that really meant looking at how we could help improve their environmental efficiency, their health and safety standards, the overall standards of governance, while always ensuring they grew, that they became more sustainable, and that they continue to support and create jobs. And on reflection, as we look back, that move towards emphasizing that greater impact was clearly the right thing to do. And today, I believe we've got a much better understanding of where we're making a difference and where we're not. And we're constantly learning about how to do our job better. And the whole process, indeed, has been helped by the excellent partnerships and insights that we've received from our shareholder at FCDO, but also from those organizations such as ICAI and the International Development Committee that have responsibility for scrutiny of BII. And this has been particularly important over the past year. As Diana's already touched upon, 2022 saw not just one, but a whole series of challenges. Before the world had really recovered from the COVID crisis, we experienced an increase in violent conflict, particularly, of course, through the war in Ukraine, and that in turn sparked an energy crisis and a food crisis. And that's had a major economic impact on higher inflation, higher interest rates, over-indebtedness, depreciating currencies, weak economies, and capital markets. And of course, at the same time, we have felt the increasing impact of climate change through more frequent and extreme weather events. And as always, all these things hurt the poor more than they hurt the rich. And the countries least well able to respond are those lower income and lower middle income countries, which constitute BII's principal investment universe. And so all of this means that what we do as a DFI becomes even more important. And our unique mission, and the mission of all our DFI peers, and indeed the mission asked of us by our governments, is to provide investment support to the private sector, and the private sector only, to help support the building of businesses, infrastructure, and economies. And our theory of change, and we don't pretend it's a panacea to solve all the world's problems, is that countries only become more prosperous and people's lives only improve when the private sector grows and creates jobs, pays taxes that support better public services, and creates opportunities and better livelihoods for all. And of course, the private sector can only grow when it has access to capital. And the countries we invest in do not have domestic savings or their own capital markets. So they rely on organizations like BII to provide that capital, stimulate that growth, create those jobs, and build that infrastructure. And it's only when they receive that investment that people and economies can move away from reliance on development assistance and aid and become more self-sustaining. And over again, we hear from voices and leaders across the political spectrum in our countries, and particularly in Africa, that this is the type of development support that they most want, a hand up and not a hand out. And we don't pretend to be the answer to every problem that exists in poor countries. Indeed, that's why development finance and BII are only a relatively small part of the UK's overall development spending. There are lots of things we cannot do. And if you're starving in a drought in the Horn of Africa, or if your home's been washed away in a flood in Bangladesh or in Pakistan, well, then development finance is not going to be any sort of solution in those circumstances. And you need help, and you need humanitarian support. And I personally have always been very proud that the UK is always among the first to step forward in those situations. And that should always be the first priority for our ODA spending. But for the vast majority of young people in poorer countries, those are not the problems they face every day. The problems they face every day may be less acute, but they're no less important. They face a lack of access to reliable power. 600 million people in Africa today don't have the ability to light their homes. They're facing unemployment. Their chance of finding a job in the formal economy in many countries is small to non-existent. Africa needs to develop almost 15 million new jobs a year just for young people entering the workforce. And indeed, the likelihood of an African finding a job today is no higher than that of their father or mother a generation ago. And also women who are trying to support their families by running a small business from home. They face a lack of access to any form of credit. They don't have any security, they don't have connections. Their small business stays small regardless of their ambition and willingness to work. If you're a small-scale farmer, you face lower yields because you can't afford access or afford modern fertilizers or find buyers for your product. If you're an urban city dweller, you've lost access to critical foodstuffs like wheat, because imports have been cut off by the war in Ukraine. And especially for young people who want to be and desire to be part of the digital economy, and they see their world changing all around them. They want to be part of it and they want to benefit from it. High-speed internet access can provide that connection, but in many countries they don't have access to that internet. So why do I mention all of these? And it's not because they represent the totality of challenges that populations face in poorer countries, but they are real. And importantly, they are illustrative of the sort of problems that grants do not fix in any sustainable way, but development finance, if properly used, can provide long-term and sustainable solutions. So now I'm in the fortunate position of chief executive of this company, of being able to travel widely. So that means I get to see our investees close up. I see what's working, and importantly, I see what's not working. And by the way, when we make about 70 new investments a year, so there are certainly going to be some that don't work. As Diana said, we have about 1,500 enterprises in our portfolio, some of whom worked in the beginning, but they don't necessarily work now. And I always tell our teams that what is important is not that you don't make any mistakes, but that when you do, you deal with them, you learn from them, and that you evolve and you get better. And hopefully we're doing that. And I mentioned some of the day-to-day challenges in our geographies, and as I said, I travel a lot, and I wanted to give perhaps a few examples of where I've witnessed our investments really helping to address some of these problems. First of all, I want to go to Nepal and talk about the issue of access to the internet. And we know that access to affordable, good quality internet can really have a transformational impact on people's lives. It's critical for businesses and local economies to grow, and to increase access to education and to healthcare and to banking. Yet nearly half the global population remains unconnected today. Last year, I visited one of our investees, which Diana mentioned, WorldLink, an internet service provider in Nepal. And that's a country where affordable broadband has reached just a quarter of households, almost all of whom live in large urban centers. And what WorldLink is doing is expanding internet access across the more remote and rural parts of the country. And we first invested in 2019. And we had the opportunity, when I was there, to visit a small community. It's about 3 hours outside of Kathmandu, in one of the smaller valleys off the Kathmandu Valley. It's a district where WorldLink has recently introduced high-speed internet access. And of course, it is great to see the technology, but what's really special is to meet the people whose lives are getting changed by the availability of that technology. We visited the local health center, the local school. We spoke to women who are running small fabric businesses, and all showed how the advent of high-speed internet access has revolutionized their lives. And that infrastructure has to be built and developed by the private sector. And the company were absolutely clear that they would not have been able to do that if BII had not been prepared to take the not insignificant risk to provide patient equity capital to help them to grow. So that's the sort of difference our work makes. And next, I want to go to Karachi in Pakistan and take the issue of women not being able to get access to the small unsecured loans that they need to grow business and care for their families. And I visited Cash Foundation. It's a microfinance institution. It's a non-profit organization. It lends money to women entrepreneurs. And we met a group of 30 women running small businesses in their homes to try to create some additional income. So they were doing things like making fabrics, they were running small nurseries, or running a small beauty salon. And they really were an inspiring group of people. And they couldn't have done that without the loans that they were receiving from Kashav. And effectively, all the funding of Kashav comes from development finance institutions, including, of course, BII. And to take another issue, and perhaps the biggest issue of all, the lack of formal jobs for young people in Africa, a continent with the world's youngest population. We're a critical part of the Safaricom Ethiopia consortium, which is developing the second mobile network in Ethiopia. And that's not only transforming the economic prospects for millions of Ethiopians through providing better access to mobile telecommunications, network, and services, but it's also making a difference by providing jobs to the people who are helping build the company in Ethiopia. And I visited the Safaricom Ethiopia headquarters. I met some of the 400 employees, mostly young Ethiopians, all of whom had joined the company in the previous year, who now have this opportunity to work in this high-tech, highly skilled environment. No other group bid for this license, and without our bid, it almost certainly, without our involvement, our bid would almost certainly not have been able to go forward. Another critical issue today, particularly in Africa, is food security. And again, clearly we're not the World Food Programme, or we're not set up to provide food directly. But where we can make a difference is investing in businesses that produce products farmers need to improve their yields and increase their incomes, or businesses that use local supply chains to process commodities locally, connect farmers to global markets, and keep more of the value chain in country. And last year I visited one of our investee companies, ETG. It's an agribusiness, a large agribusiness operating across Africa. I had the opportunity to visit its operations in Mozambique, in Malawi, in Zambia, and in Zimbabwe. And I saw there the difference that companies like ETG can make for smallholder farmers by providing markets for farmers, by providing inputs like fertilizers and seeds to help increase yields, and by providing free training and support. And I spoke to groups of farmers about the challenges they're facing during this, what is a hugely difficult time for agriculture, and how their relationship with ETG is really helping. And of course, at a time when many larger agricultural companies are withdrawing from Africa, it's critical that companies like ETG can continue to provide markets and support for smallholder farmers. And also because so many large international financial institutions are withdrawing from Africa, almost all of ETG's financing today comes from DFIs, including BII. So finally, let me talk a little bit about the work that BII is doing to help address the other great challenge of our time, namely climate change, and how we can help countries transition to a net zero pathway. And as I mentioned earlier, earlier this year, I visited Pakistan. This was in the aftermath, of course, of the devastating floods that resulted in around $30 billion of economic losses, nearly 1,800 deaths. 6 months later, it's still estimated that over 20 million people still require humanitarian assistance. Again, while we're not, and we never can be, the emergency responders to disasters, I believe it's vital that development finance plays an urgent and important role in mitigating climate change and helping businesses and communities to adapt and to become more resilient. And when I became chief executive in 2017, the Paris Agreement had become effective about 6 months earlier. There was some work underway here on climate, but the organization really wasn't set up to help with the response to the climate crisis in any systematic way. And I'm very pleased to say that's really changed today. In 2022, we invested nearly £600 million, 46% of our annual commitments in climate finance. And that makes us one of the leading climate investors in Africa and Asia. And it also makes us a critical part of fulfilling the UK's important commitment to funding transition in developing countries. It's the largest amount of climate finance we've ever delivered in a single year. And that amount's not only about investing in large-scale renewable power, and actually increasingly that's a role that could and should be filled by more commercial investors. So our role is really about investing in more new and innovative ways of providing renewable energy. Like Scatec South African Renewable Energy Technology Project. It's the first sizable battery energy storage and PV solar project in that country, and it will provide significant additional clean power to the grid. Or working with Fertiglobe in Egypt to provide green hydrogen, or with Mahindra in India to accelerate the transition to electric vehicles. Or indeed providing innovative green finance, such as our partnership with Symbiotics to launch the first ever green basket bond across Africa and Asia that will finance small-scale green projects and businesses. Or investing in sustainable agriculture, like Akshayakalpa in India, which is introducing more sustainably farmed products to consumers in India. And you'll hear more from them in one of our panel sessions later this morning. So let me say this again. Finance and investment are not a panacea for solving all the world's problems, but they have to be an important part of the overall solution. And when I talk to people in different countries about the challenges they face in being able to get on and live full, healthy, and productive lives in their countries, I also hear about the sheer scale of that challenge. Entire energy, water, and sanitation systems that need to be built. new transportation systems, roads, ports, warehousing, education and health systems with appropriate skills, training, and retention. And then we hear about the numbers attached to meeting the challenge. $3 trillion per year to meet the SDGs. And that's only going to come through finance and investment. And our job at BII is to be at the forefront of that investment, to go to those places that others will not go, to take risks that others will not take, to demonstrate that it's possible to build sustainable business in the toughest countries, to encourage others, more commercial investors, to partner with us. So I'm not going to stand here and tell you that we're perfect or we're getting everything right, but I will tell you that every day, every person at BII comes to work seeking to make a difference to people's lives. And hopefully some of my examples and everything that's in our annual review published today illustrates how much great work is being done here. So I want to close by saying thank you most of all to the team and the board at British International Investment, to all our partners, particularly the FCDO and our investee companies, for their tenacity and commitment in achieving so much and over such a difficult period. I'm enormously proud of what we've achieved together, and we look forward to building on that track record in the years to come. Thank you all for listening. And now I am pleased to pass you over to BII's Chief Financial Officer, Carolyn Sims, who will provide some further information on our financial results in 2022.
Thank you, Nick. Our 2022 to 2026 strategy outlines our plans to commit up to £9 billion over the period. This is an ambitious target and exceeds the £7 billion committed over the 2017 to 21 strategy period. Despite the scale of this ambition, we don't set annual volume targets, as we want to be guided by the shifting needs and opportunities of the countries we invest in, as well as retaining the highest standards of investment selection. In 2022, British International Investment committed £1.27 billion of new impact-led investments. While this rate of commitment remains significant, it is similar to our commitment level in 2020, it is lower than our commitment level in 2021, as we reacted to macroeconomic headwinds. These external conditions caused significant depreciation of sterling, reducing the amount of capital available to make new investments in US dollars and other currencies. Total net assets increased from £7.7 billion at the end of 2021 to £8.1 billion at the end of 2022. Within this, the investment portfolio increased from £6 billion to £6.9 billion. The main reason for the growth in the investment portfolio was the higher pace of drawdowns compared to realisations and foreign currency valuation gains throughout the year. Our overall result is a profit after tax of £167.7 million, which compares with a profit of £463 million in 2021 and represents a gain of 2.2% on net assets in 2022. The portfolio generated a £285.6 million return in 2022 compared with a £584.4 million return in 2021, representing a portfolio gain of 4.8%. Our new financial performance measure, as defined in our 2022 to 26 strategy, articulates our appetite for financial risk and return, as well as ensuring the proper stewardship of taxpayer-owned assets. We will seek returns of 2% across our total portfolio, measured on a rolling 7-year basis. We remain ahead of this financial return hurdle, and the 7-year weighted average annual portfolio return is currently 6.1%. I mentioned earlier that external factors affected our commitment rate in 2022. They also impacted our wider financial results. First, there was the impact of macroeconomic headwinds and rising interest rates in our markets. We track returns in US dollars as most investments are denominated in this currency. And in dollar terms, the portfolio generated a loss of 3.8% due to these economic conditions. This was, however, a better performance than market indices, which, although not a perfect comparator, showed more significant declines. Second, our financial results can be significantly affected by changes in the sterling to US dollar exchange rate. This was the case in 2022, where sterling substantially depreciated during the year. Nonetheless, despite the impact of external factors, We are long-term investors, so it is important to look across multiple years for trends. It remains the case that our targeted developmental strategy, with its narrow geographic mandate and challenge to seek out risk, is likely to lead to lower returns and increased volatility in the portfolio. 2023 will continue to be a challenging year. Whilst we've seen a reversal in dollar sterling exchange rates, we have seen currency volatility in many of our markets, such as Egypt, Nigeria, and South Africa, and interest rates have continued to rise. The World Bank projects that emerging and developing countries are facing a multi-year period of slow growth, and we expect to see further impact from geopolitical factors, including the ongoing Russia-Ukraine war. We remain committed to our impact objectives, but also to achieving long-term positive investment returns. We will continue to balance our approach to achieve both aims. Thank you.
Thank you, Carolyn. Please can I remind you to keep putting any questions that you might have for the Q&A in the box at the bottom of the screen. Next up, we're going to start delving deeper into the places where we invest. We'll start with a short film about the work of one of our Nepalese investees that we mentioned earlier, WorldLink.
Connectivity is very precious because connectivity now means access to all the information that you need. So information has mostly been enabling most of the things in life.
नमस्कार, मेरो नाम सानिमय कुमाल। नेट राखिसकेपछि चाहिँ मेरो व्यवसायमा अलि सुधार आएको छ। पहिलाको भन्दा अब नयाँ नयाँ डिजाइनहरु हेरेर सर्च गरेर कपडा सिलाउनु सजिलो भएको छ मलाई।
यस केन्द्रको कार्यालय प्रमुखको रूपमा विगत 2 वर्षदेखि चाहिँ म यहाँ कार्यरत छु। इन्टरनेट नहुँदाखेरि हामीसँग चाहिँ हाई स्पिड इन्टरनेट नहुँदाखेरि थुप्रै समस्याहरू भएको थियो हामीलाई। इन्टरनेटको अलिकति राम्रो हाई स्पिड इन्टरनेट र नेटवर्कको सुविधा भएपछि चाहिँ त्यसलाई हामीले इन्टरको सबै हामीले दिने सेवाहरूलाई इन्टरकनेक्ट गरेर एउटा पेपरलेस सिस्टम र अनि त्यसपछि इफेक्टिभ रेकर्डिङ र रिपोर्टिङ।
We mostly use this investment in infrastructure development, so rolling out the network in the villages. So that is where most of the money goes, in expanding and reaching out to the far-fetched areas where the people do not have access to good and reliable internet.
Understanding and listening to what the people and the businesses in the countries where we invest is vital to our work. Over the past few years, we've been increasing the number of our staff that are based in Africa and Asia, and I'm delighted to be joined now by the 2 people who head up those teams. I'm joined by our head of Asia, Srini Nagarajan, and our head of Africa, Chijiutomi, who can talk to us about how it feels in the places where we invest and how we've been getting on executing the first year of our new strategy. Welcome, Chris, Srini, thanks for joining me.
Thanks, Lindsay. Thank you, Lindsay.
Srini, I'm going to start off with you. After the difficulties of the pandemic and the serious toll it's taken on businesses and communities, I think we were all hoping for a slightly smoother 2022, but that hasn't always transpired. How's it felt from the Asia region?
Thanks, Lindsay, for the opportunity, and good morning and good afternoon to people. I'm first of all glad to say that BII plays a dominant role in Asia with its commitment to development impact and its relentless pursuit to be playing a role that is supportive to the private sector and mainly creation and preservation of jobs, which is very critical where we are today. Asia is a mixed bag. In South Asia, Indian economy bounced back after the pandemic. The surplus liquidity provided by the government and plus the pent-up demand helped the cause. India grew by around 6.2% in 22 and expected to grow by the same percentage in 23. The healthcare system did reasonably well, especially the challenges posed by the pandemic. The the digitization mission in India continues relentlessly and has been a game changer in the country in trying to reduce the cost of services, really. However, on the macro side, erratic monsoons and resultant inflation are certainly a worry for us, really. From a BII standpoint, I wanted to mention two aspects that has been particularly exacerbated by COVID-19 and relevant for us. The first one is the income divide between the rich and the poor among societies have worsened post COVID-19, particularly the diminution of wealth of the bottom 50% of the population. And secondly, there is a clear need to improve women in labor force. And I think because the participation of women in formal labor force in India is close to 24% approximately, vis-a-vis countries like China, which is upwards of 40%. So there is a large section of the population that requires developmental capital from an inclusion perspective. That's precisely where we are focused besides sustainability. The rest of South Asia has been a slightly different picture because the rest of South Asia, the post-pandemic recovery has been a little bit short-lived as the sharp energy prices and commodity prices, also exacerbated by the war in Ukraine, and the political uncertainty in some countries, and politics and economics are linked to each other, and increased macroeconomic stress on both external and domestic fronts. We have witnessed devaluation in most markets, high level of inflation, which has affected a common man, continuing to, and also leading to import restrictions and slower growth. Amongst all these countries are in almost all these countries are in different stages with the IMF program, really. Of course, Bangladesh and Nepal have shown considerable resilience through these challenges and expected to recover than Pakistan sooner than Pakistan and Bangladesh. Pakistan, of course, signed most recently a staff level agreement with IMF. However, the extent of upcoming debt repayments will continue to stress the Pakistan's fragile FX situation, foreign exchange situation in the short to medium term. Finally, I think, look, for these economies to go back to the pre-COVID level, it'll take some time. And once there is stability, the requirement for development capital from institutions like us is more prominent is more prominent because given our ability to crowd in more foreign investors, and there is support needed to shore up the forex reserves. Lastly, in Southeast Asia, one sentence on that is that we have expanded in Southeast Asia more recently by opening an office in Singapore, which where I am headed, where I'm heading, with a climate ambition of investing up to 500 million pounds over the strategy cycle of 22-26. Here, the macros are relatively stable, but carbon emission is an issue, and hence our focus on climate change. Because fossil fuel remains a main source of energy and even exports from countries like Indonesia. So we will focus on the core energy transition theme in the Vietnam, Indonesia, and Philippine countries and make sure that our capital is much more complementary to mobilize the large capital available from the sovereign wealth funds and pension funds. I will conclude by saying that macro challenges are enormous. We have to navigate carefully to support this nation as a countercyclical investor. Let me stop there, Lindsay.
Lovely. Thanks, Srini. And Chris, how about Africa? Is it the same? Is it the same sort of mixed bag, or are you seeing something different on the continent?
Thanks, Lindsay, and good morning and good afternoon all. Similar to Srini, I think Africa is a mixed bag, more in terms of adverse impact of, I guess, the slow recovery from the pandemic. I'd probably start by saying Africa actually, from a health perspective, did well during the pandemic. Some of the challenges from a health perspective seen more globally didn't really impact the population in Africa, largely because it's a younger population. But what I will say is 2022 has been not an easy year. It's been challenging and it's been full of complexity as you go through the different countries across Africa. I guess overarching, I would say the expected growth has been much slower than we all thought. If I look at the 2021 GDP growth figures, it was 4.8%. And the aspiration was 2022 was going to be an increase, recovery from COVID. The reality is at the end of 2022, it was actually 3.8%. So in real sense, then you'd say that's really been a driver of some of the issues we've seen. But if I dive in a bit deeper, so from a COVID perspective, the delay and the impact from the global supply chain. Africa is still a net importer of goods and services. So as the cost of logistics has increased and the cost of raw material has increased, it's had an immediate and direct impact in terms of key African economies. Some of our portfolio companies that are delivering infrastructure projects, for example, in the continent, have suffered from increased prices of material for some of the transactions that we've been involved with. So we've seen a direct impact in terms of the issue around the global supply chain. I think the other key one, which I think is even more longer lasting, has been the impact of the Ukraine conflict. Impact really driven in two areas. One has been the increase on energy costs. A lot of the countries in Africa imports is energy in terms of fuel, both for power and also for industry. And then the second one is around food. Africa imports quite a substantial amount of wheat, both from Ukraine and also from Russia. So the increase in food prices has had an immediate effect on the average person in most of our countries. So I'd say these, for me, have probably been two big drivers of some of the challenges why it's been quite a complex scenario across all of Africa. I think the other key ones, let me maybe touch on high inflationary environment. We've seen capital flow out of Africa to other more attractive destinations, especially for private capital. So that's led to increase in terms of currency devaluation in some of our key countries like Egypt, like Nigeria. We're starting to see similar things in Kenya. And I think some earlier speakers, Nick touched on it, Diana touched on it. We've had significant extreme weather issues across the continent. Southern Africa, halfway through last year, there was a lot of flooding. The flooding there, aside from kind of the cost of lives, but there was also cost to production, particularly in terms of the impact on the agriculture space in Southern Africa. In East Africa, we've seen issues basically around drought in Tanzania, lack of rain in Kenya. This has then led to reduced exports for the agri sector in those countries. Reduced exports then means lack of forex, which then ultimately impacts the economy. So these are some of the challenges I've seen. A more recent one, which we saw the back end of 2022, in my engagement with governments in the Sahel region, has been the increased amount of insecurity, conflict, and what that has then led to is more human migration from the Sahel. So from the government's perspective or the engagement on the private sector in those regions, they are asking for our type of capital. We're a counter-cyclical investor. We invest for the long term and we have patient capital. So the one thing I've seen across 2022 has been positive engagements from private sector in terms of looking to build on new partnerships with BII. I've also seen engagements from government in terms of seeking our views around what are required to create the enabling environment for more capital flow into the region. Ultimately linking back to the fact that job creation is seen as a big way where the continent can start to get itself out of the current challenge that's out there.
Yeah, and it's a real stabilizer, isn't it, at a time of instability too. I'll stay with you, Chris, just in terms of what's that meant for our investment activity over the last year? Has that changed at all, particularly because it's the first year of the strategy too?
Yeah, no, I think one way to look at some of the challenges is I think it's actually created for us, particularly thinking about our impact-focused investment themes, it's created great opportunities for us. So let me speak to some of the key opportunities that I think it's created for us. So one common conversation that's occurred throughout 2022 is the impact of climate and the need for more climate finance across all our markets. So I've definitely seen a lot of activities and a lot of investment focus from us, but also from the countries in terms of their need for climate finance. Specific examples, so I was privileged enough to attend the Africa Cup in Egypt, which BII, alongside our shareholder, played a key role in terms of engaging with governments and key stakeholders about how we can deploy climate finance for where it's most needed. So some of the key things I've seen is we have an increased focus now in climate mitigation from the perspective of building more renewable infrastructure assets, especially in South Africa, where we are playing a key role with projects like the Canard projects, where we are starting to become a key player in the energy transition of that particular country. So that's one key area where I'm starting to see a lot of activities. The other one, from a mitigation and adaptation perspective, is we in 2020 announced a key partnership in the water and sanitation space, AWID, Africa Water Infrastructure Development, which is a platform to help Africa with the underserved position it has with regards to water and sanitation. So I see some of these key areas in terms of the impact and the need for patient long-term capital, the climate crisis driven by some of the adverse weather condition. And this is now leading to us, especially when we think about our sustainability impact themes, for us to start investing some of our capital in these markets.
Right. And if I can come to you too, Srini, we've completed our first year of our new strategy. What sort of differences are you seeing in how we're approaching, and what sort of things are having the biggest impact across Asia?
Thanks, Lindsay. First of all, I must say our development impact methodology gets to the core of our problems in our markets. We have the most sophisticated methodology, and I think this is a great way to address. I mean, seeing our investments through the lens of our new development impact methodology helps us remain very disciplined and stick to our mission. So I must say, I'm very proud to say that BII has the most sophisticated development impact methodology. And really, it helps us to solve some of our development impact challenges in our markets. Energy transition, for example, is very critical. If you look at Asia on the climate-related issues, you know, economies can fall between two buckets. You cannot ask economies to stop fossil fuel abruptly, as this will affect their growth, nor economies can say we will postpone climate investments and let the other countries do the big adjustments and we'll catch up later, which is dominant in Asia. Both impractical ambition and lack of ambition can have imponderable consequences. So our new framework helps us focus on energy transition and adaptation rightly. Our shareholders, of course, are doing very effective work in JETP program in Indonesia and Vietnam, and we are very aligned with them in terms of our ambition in energy transition. Of course, in terms of the overall risk of our markets due to credit downgrades, which is similar to what Chris was mentioning in Africa, the demand for capital has increased given the environment. Greater scrutiny is required, that we are using the right investment instrument for solving immediate and strategic problems by partnering with the right sponsors in critical sectors. I think the overall pace of investment activity in countries like Nepal, Bangladesh, and India have remained quite resilient across this period, really. So I'm proud to say that. The last point I just want to leave here is that some of our overall investments, I think the way we are driving our investments is through our themes of development impact. I think, in fact, deals are tools for us to achieve our development impact, really. And that's the way we look at transactions. And I think if you try and look deeper into our various investments we have made, right from financial services till climate and the ITS sector, and it is addressing various problems like gender, climate, and inclusion, keeping one of our core themes. And I can go on with a number of investments which are helping us solve these development impact challenges in Asia.
Great. And very quickly, briefly, both of you, if I can ask you, just what are you excited about for the next 12 months? What do you think it's got in store? Chris, can I come to you first?
Yeah, no, so I remain very excited. I think difficult times, as we've seen, is creating big opportunities for us in terms of how our approach to investing can really help a lot of the countries in my region across Africa grow and sustain the current challenges. So some of the key themes that excites me is our approach to food security. I think the Ukraine war, conflict, has enabled a lot of countries to actually think internally in terms of how they can start to focus on food and agriculture across all the value chain. So I see BII playing a big role across all our suites of products, across all our various sectors, where from infrastructure through to food and agriculture, through to financial services, where we can actually play a role to support smallholder farmers. So I think that's one excitement. The second one, and I'll probably close on that, is just really around the impact of technology. technology in Africa is growing at such a pace that it's driven by the problems that the countries in Africa have to solve. There's a company called Moniepoint, which I think there's a video later around it. Some of what Moniepoint has been able to do in Nigeria has been transformational, both from an inclusivity perspective, but also in terms of productivity, helping businesses get access to finance to allow them to grow. So I think those two key areas, I remain very excited for 2023 in terms of what I'm seeing and what my team on the ground are also experiencing.
Great. Yes, and we will be hearing from Moniepoint later on this morning. Srini, how about from your side?
Thanks, Lindsay. The next 12 months is a very interesting period. Why do I say this? Our capital is most required in some of our markets and most of our markets that are going through macro stress and which will help stimulate and provide confidence to private sector investors to come in. Of course, in these economies have to come into terms with IMF, and our ability to invest in South Asia might continue to be impacted by macro challenges. Additionally, Southeast Asia lacks bankable opportunities, and our capital will be much more valuable to create these. And then we work with the partners around within the region to drive the climate change agenda, really. Finally, I just want to say two things. I want to say that BII is a very unique place that puts development impact in front and center of what it does, and also works with companies to raise the overall sustainability and governance standards and make them world class. Ultimately, our test is what we leave behind as a legacy in these economies where we focus and create a strong private sector. We have done that over decades. And I really want to thank our shareholders for the continued support across Asian and African geographies. On behalf of Chris, I'll say this, and particularly the high commissions and embassies through our markets in Asia and Africa, and especially Southeast Asia, where we are relatively new entrant. Thanks, Lindsay.
Brilliant. Thank you very much. Thank you, Srini and Chris, for joining us. And I think we're all hoping for greater stability and a better outlook across more of the countries we invest in during the coming years. I'm afraid that's all we have time for now. As we've now reached the time for our Q&A with our CEO and Chair, and I'm really pleased that I've been rejoined by Nick and Diana. So thank you to everybody who's been submitting questions. We've had a lot come through, so I'm going to try to get through as many of them as I can, and I'll attribute wherever I can, if you've said who you are. So the first one that I'm going to start with is from Tom Sanderson. Can you say a bit more about how you're mobilising other capital? How hard are you trying? How difficult is it? Yeah.
So thank you, Tom. I think, look, mobilization is a critical element. I made the point actually in my speech that the scale of capital required to address the sustainable or achieve the sustainable development goals to facilitate the transition to net zero, the scale of that capital is huge. And we all know that we're not going to get there just on the back of what's available through the aid budget or the philanthropic budget. So we're going to need to mobilize capital from the commercial sector, and that is a key objective for development finance institutions, both the bilateral DFIs like BII as well as the multilateral development institutions. It's a key theme also in the discussions around the Bridgetown agenda, and how can we, with the capital that's available, how can we do more to leverage in other capital? I think from BII's perspective, we have seen over the last sort of 4 or 5 years a significant upward trend in the amount that we're able to mobilize. I think last year it was about, for each dollar that we invested, we mobilized about 90 cents. That was a record that was more than twice what we'd done in previous years. You do have a challenge when you're mobilizing capital around trying to balance, on the one hand, the additionality, which is required for a DFI. You know, we're not supposed to put money where other people will put money. And then on the other hand, we want to mobilize alongside us. So those two things can be contradicting. We also, we're fortunate in that our FCDO has supported us with some more concessionary finance, which the Climate Innovation Facility, for example, allows us to use that more concessionary money to leverage in other investment firms. So we're seeing also a much greater interest, particularly on the climate side, I have to say, much greater interest from the City of London, big institutions here who want to learn more about investing in our markets, and again, particularly in climate. So it's a major theme for BII, and I think we can point to significant progress. Still more to do, but significant progress over the last couple of years.
Great, thank you. Next question is on what do we need in terms of development cooperation and support from the likes of our shareholder to help, and other public actors to help us work more effectively across the development network. Has that been something that's been a feature of the conversations we, for example, have with our shareholder? We have British investment partnerships and so on now.
Absolutely. Well, I think, I talked about the fact that we have a really very wide range of partnerships at BII. The shareholder is obviously a key one. And I think, as I mentioned, with the name change, but also with our new strategy, we do, I think, feel an even stronger part of the UK's overall approach to these markets. I think that British investment partnerships is a very interesting idea to bring together a number of different actors across the spectrum. And we've definitely seen renewed cooperation and a much more intense collaboration following that. That isn't the only area of cooperation. As Nick's just mentioned, one of the areas the shareholder supports us in terms of concessionary finance. And we work consistently, not just with FCDO in London, but across our markets, both to identify opportunities, to understand the local landscape and where we can have the largest amount of impact. That type of partnerships extends across other public organisations around the world. So there are the MDBs focusing on the different Millennium Goals. I think all of these we work with a very significant network of partners. I don't think there's anything at the moment that we feel we're enormously lacking, but for us, doubling down on those partnerships and making sure that we are more able to work with all of our partners is a key focus.
Lovely, thank you. There are a lot of locally managed and medium-sized to large business that don't have a lot of formal or well-established structures and processes, but they have a huge impact. And sometimes they need quite bespoke solutions to help them get that sort of right mix of financing. So one of the questions we've received is what are we doing to try to engage on some of those challenges where there's that gap in financing?
I think that's a very important question, because we know that you can't just show up. We are an investor. That's what we provide, is repayable, recyclable capital. But you can't just show up as an investor and make a loan or put some equity into a company and then disappear and hope that things are going to work out. And particularly that's true, of course, in our markets where there are significant capacity and knowledge gaps. So I think when we approach companies and we work with companies, it's a sort of it's a multifaceted or a much broader approach than your typical financial investor. We have a small technical assistance program that we can use also to build capacity in companies. We do an enormous amount of training. And some of that training is focused on sort of ensuring that environmental and social governance standards improve. But it's also, we do sort of more traditional training on business management and so on. So I think it is, but I think the point is, if you're a development finance institution, you have to think about your relationship with your investees in beyond just capital, and think about it broadly and what are all the things that this company needs, recognizing the context in which they work to really be a successful and sustainable enterprise.
That actually brings us quite well onto a question from Samina at Atlas, who's asking about encouraging women in the private sector and what plans we have potentially to train professionals who are based within our BI portfolio, or just provide tools to help those companies to help women excel in those organisations. I know we've got toolkits and training that we've done. Is there more you can?
No, I think this is another very important question. I must say that of all the things that have happened here at BII over the last 6 years, one of the things that I'm most proud of is the role that this organisation has played in the development of the 2X Challenge. And the 2X Challenge, for those people who don't know, is focused on gender lens investing. It's focused on investing and getting money to companies that are run by women, managed, owned by women that cater specifically to women through their products and services. And we were really a founder or co-founder of that whole program, and it's led to billions of dollars of additional money being made available to women-owned businesses. So I think that's a really important, has been a really important contribution during my time here. I think, but then, and we have a target of having 25% of our investments be 2x qualified. We've exceeded that target in 2022. But of course, that doesn't mean that only a quarter of our investments are think about women, or it's only in a quarter of our investments that we think about the gender aspects. I mean, that is embedded in every single investment. In the vast majority of investments, we'll have a specific gender action plan that we'll develop with the investee before we put any money in. So it's across the piece. It's a really important part of, I think, the role that we can play. And we know these countries are not going to prosper unless women play a full, engaged role in the workplace.
Thank you. Next question is, there's been quite a lot of discussion recently around transparency. And one of the questions is, what are we doing around that?
Let me start at least with the sort of board perspective on transparency, and Nick can talk about some of the things that we're doing. I think the first is that the aspiration of the shareholder, of the board, and of the entire group of employees at BII is that we are leading in transparency. We want to be a transparent organisation, and I think on a large number of dimensions we are. We obviously have engaged with Publish What You Fund recently. We were disappointed to see where we ranked in their survey, and we're working to rectify those. But it's important to call out that on a number of dimensions we scored very highly. I think whether it's ICAI or others, transparency has been something that people have traditionally called out in a positive way about BII, and we really do want to make sure that is an ongoing feature for us. There are a number of areas. We have an extensive survey of our impact every year that's done by an external organisation. We publish that and similar pieces. There has been a challenge around some specific more detailed areas of what we publish on the website, and that's something that I think we recognise. As I said, we recognise we need to do better, and we're very grateful to those that point that out, but it's absolutely a focus. Nick?
Yeah, look, I would agree with everything Diana said. Again, and she mentioned also in her remarks, I think Publish What You Fund has done everybody an enormous favour by producing really a clear benchmark for transparency among DFIs, and a league table that forces us, that sort of incentivizes us all to do better. So we were, as Diana said, we're a little disappointed in how we did. Some of that was, I must say, technical, with related to how we were uploading our information on the website. Some areas we did very well, actually, and I think it's fair to say we were the leading bilateral DFI in terms of how we presented our development impact. We were also I think second in terms of how we presented our fund and our intermediary investments. Where we did not do as good a job, or as sort of communicate as broadly or be as transparent as I think we need to be, was in the area of environmental and social action plans and risks. It's not because we don't have them. It's just, but we are not putting them on our website and making them public in the way that others are. So I think that's a clear area. That's a clear area where we would improve. But as Diana said, this organization, and we know we don't complain about this, we welcome it, but we are subject to an enormous amount of scrutiny. Multiple ICAI reports, multiple IDC reports, including one, as you know, that's specifically focused on us now. We have one of the largest measurement and evaluation programs that has produced reports on our infrastructure investments, on our FS investments, that's independently run, monitored by FCDO. So, and all of these organizations, by the way, get absolute access to everything that's in here. So we know we need to do better. But yeah, I think I don't think we should think that it's not that we're not, I think, on top of these issues, but we just need to do better in terms of getting in the public domain.
Great, thank you. Next question is from Eliza at Blue Orchard, and they've asked, with regard to which instruments, sectors, regions, or countries, where do you see the greatest potential in the future to achieve development impact? So, yeah, What would be the leading thing?
So look, I think, let me start, take a shot at that. Look, I think let me sort of divide the development finance piece from the climate finance piece. And of course, there's huge overlap between those two, and that's where we sort of seek to play. But I think if you think about development finance and where are those places that need the greatest support in providing capital to the private sector so that they can grow and create jobs and pay taxes and so on. I mean, I think you'd have to say that Africa still remains, if we look at the distance that we have to travel to achieve the SDGs, we've still got far and away the largest distance to travel in Africa. We are, BII, I think we have the largest percentage of the large development finance institutions. We have the largest percentage of our new commitments going into Africa. That will continue. To be the case. I think when you look at climate finance, it's probably a slightly different picture in the sense that the biggest appetite for capital comes from those countries that have the greatest sort of, in a sense, the greatest distance to travel from where they are today, and those countries particularly that have large coal-based power. So you think in our world, places like South Africa, like India, like Indonesia, like Vietnam, the appetite for capital in those markets, it's huge. I think the challenge for us there is to make sure that what we're doing is additional. And I mentioned in my remarks, doing the stuff like, for example, floating solar in Indonesia, not doing the traditional utility scale renewables, and so, which I think increasingly commercial capital is doing, but really focusing on, in those countries, the more innovative and newer technologies. But I think that's where on the climate side the greatest challenge is, as well as, of course, within Africa, you've got this overlap between development and climate because 70% or 600 million people have no access to power. So of course that's a problem that has to be solved, and it has to be solved through green power. So that's will continue to be a focus.
And it's also, of course, one of the biggest development challenges for people who are living in those countries. They're possibly the most vulnerable to the impact of climate change too. Next question that's coming through. Everybody's being shy. I'm getting lots of anonymous questions. I want to know whether we have any specific initiatives when supporting the financial sector in sub-Saharan Africa, and what our priorities are.
So we, like in common with all other development finance institutions, a very significant part of our investment goes through financial intermediaries, through financial institutions. And that's, we need those organizations to take our money and sort of break it up and on-lend it onto other, particularly small and medium-sized enterprises. I think what's changed over the last 3 or 4 years in terms of how we do that is that we're much more directive than we were in the past about how that money is used. And I think you'll hear actually in the panel presentation from Zanaco, which is a bank in Zambia, which is I think a really good example of how we have directed money. We're directing the money towards, and typically that money is directed to one of 3 areas. It's directed either for climate-based investing. So we've had a couple of both in Pakistan and Nepal. We've got a couple of banks that have facilities specifically to help support, for example, the development of small-scale hydro in Nepal. So that sort of directed capital. So climate is one. Gender-based investing is another one, increasingly becoming an area where banks are willing to direct that money, and then small and medium-sized enterprises, which historically have been left out from a credit perspective. So those are really the main ways that we work through financial institutions.
So next question is about how we engage with civil society, and the question is around how we engage both, not necessarily just a UK level, but also on the ground in our markets, whether we can engage further there. Who would like to?
Shall I start?
Yeah.
And, I think it's a really important question, and I think it's one that we spend a huge amount of time on. And actually, the critical piece is the civil society in the markets in which we invest. Civil society in the UK is a terrific sector that we engage with on a number of different dimensions, and thank you for all of your questions and contributions. But the piece that really impacts how our projects land and how they work in those markets is civil society in those regions. So whether it's a hydro project, whether it's a project to build a factory, where we engage with the local community and women's groups. We talked about the example in Bangladesh where we engage with local women's groups. I think those are all terrific examples of how we can continue to ever engage more deeply with those local communities.
Yeah, I mean, I think that's right. And we have some great partnerships with people like WaterAid, for example, because they're the people that really, I think, understand the problems and the issues that need to be solved probably better than anybody else. And then on the ground, I mean, every project that we're involved in, particularly things like infrastructure and so on, demand a community-based. You have to engage with the community. You have to have a community engagement plan, and we insist on that in all our projects.
Wonderful, thank you. Going on to lessons learned. So one of the questions here is what lessons have we learned over the last year? Because I think we've all talked about how it isn't always perfect what works, what in one area doesn't work somewhere else, and there's this sort of continual feedback loop. Is there anything that stands out to you that is either a lesson that you've learned from the last year or that you think we still need to do a bit of probing on that we perhaps don't have the answers to yet?
Maybe it shouldn't be a lesson learned, we should have known it in advance, but I think just how difficult the countries in which we're asked to invest in really are. I mean, it's been a very difficult period, in particularly in, not just in Africa actually, I mean, but if you look, 6 of the largest countries that we have a group of countries we call our powerhouse countries, which are 6 of the largest countries, so it includes Bangladesh, Pakistan, Egypt, Ethiopia, Kenya, Nigeria. Those are key areas for us. There's kind of huge development issues in all of them. I think all of them in the last 12 months have been had to really revert to the IMF. All of them have had significant economic downturns. All of them have had significant depreciation in their currencies, which makes the investment very difficult. So I think, as I said, we probably knew it in advance, but the level of risk is continue and their, I suppose, sensitivity to external factors. I mean, the war in Ukraine, higher energy prices, higher food prices had an impact that I think we probably, we obviously didn't foresee the war in Ukraine, but the impact, how severe that impact has been, I think has been really a shock.
2 additions. I mean, I think I'd say we've relearned or reminded ourselves of the importance of depth of expertise and engagement in market. I mean, Nick referred to Africa. I think BII's position in Africa, its engagement on the ground and its long history does position ourselves to better understand those risks and be more willing to take them. I think BII, whether it's a food facility in Sudan or other bold projects in Africa this year, these have been things where we I think have on many occasions been willing to take risks that others would not have been willing or able to take. So I think that expertise and focus and willingness to take those risks was a renewed area.
And staying on risks, it's a different type of risk. One of the questions we've had is from Roxanne. Do we or will we invest in businesses in local currency or only in foreign exchange? And then notes how difficult it is for local businesses to access.
Yeah, I think that's a really important question. It's an important question for the whole development finance community. Too much of what we do is in dollars. And that creates, particularly during, as I said, periods of economic weakness and currency depreciation, that really creates, that is not the answer for many countries or companies, and we see the pressure that it creates. So there's clearly more of a movement towards local currency lending. We are setting up, I think, I'll be in Ghana in a couple of weeks to talk about a project that we're launching there that is very focused on providing a lending vehicle for SMEs risk-based capital, but local currency based. So we are trying to do more. I think it is important also to realize, sometimes I think when people when they ask for local currency lending, they're sort of, what they're really asking for is, can we have local currency lending at dollar rates? And that's not going to work. So I mean, so the challenge on local currency is, when you exist in these markets, interest rates, because of the inflationary pressures that exist, are very high. Sometimes dollars seems to be the easy option, which of course it's not necessarily the case. But overall, you know, so many of the businesses which we invest in are basically local currency businesses. They need local currency financing, and I think it is really important for the DFIs to provide more. There are also beginning to be more hedging tools like TCX and so on that makes it a little bit easier, but it has to be an area of focus.
I've noticed it has been an area that we've talked about a lot more over the years. I remember it particularly ticked up during COVID, and some of the solar companies where we were looking at extending support there. The next question that I have is on what we think the biggest market challenges are, and whether we're doing anything specific to overcome those. We heard a little bit from Srini and Chris about, and you've also mentioned the war in Ukraine and so on. In translating that into development issues, where do we see the biggest issues, and are we doing anything specific in relation to those?
Well, I would say the biggest challenge is, I mentioned economic weakness, and that's a huge, that creates, you know, lower economic growth, and inflation in our countries creates a huge barrier to growth. And, you know, for us, our sort of theory of change depends on helping companies grow. So that's one. I think the other one is climate change. And you made the point earlier, Lindsay, that the countries in which we invest in didn't cause climate change, are not contributing very much to it at the 2% of emissions or whatever come from Africa, but they are the most vulnerable. And I think Chris mentioned in his remarks how you know, how many extreme weather events we're seeing in Africa and Asia and Pakistan, I mentioned in my remarks. So I think that is creating a whole new level of risk that has very profound impacts on you know, what we do.
Yeah, I think related to that, energy transition is a critical thing across our markets, but particularly in sub-Saharan Africa. So making sure that that transition is a just transition, and as Nick highlights, providing access to power and making sure we do that in a green but an equitable way is a critical part of that challenge.
Wonderful. I think we've got time quickly for two last. So one's just come through, which I think possibly is more directed to you, Diana, which is there is a general election coming up. We are government owned, and there is a question about what happens with the change of government. Does that mean that it affects us? Is there a change in our strategic goals or our oversight that comes with that?
So the first thing I'd love to highlight is that this is an organisation that, as I mentioned, has been focused on impact investing and development finance for 75 years. Clearly there have been varieties of strategy and performance over that period of time, but the themes around which we invest have been remarkably consistent. And one of the things that I would note is that the group of people who focus on development have that as a core belief and focus on development, and we see that across parties. BII is not a party political organisation. We are the UK government's development investing arm, and we are very much focused on being that plurally. So whilst undoubtedly any change in government will lead to changes in emphasis, I think all parties have been consistent in their support for development. So I would anticipate that BII continues to play a critical role, as it has done for 75 years, around private sector investing. I'm sure in terms of the details of execution of that strategy, we have a 5-year strategy, but in terms of points of emphasis, I'm sure there would be a conversation. But BII is an organisation that will work with all governments, and I believe that all governments in the UK are focused on the core development questions.
Thank you. And the last question that we have time for, I think, is just a general one about the SDGs. We're getting closer to 2030. What is BII's role in trying to address the SDGs?
So and you'll see on our website, if you look at any of our investments, they're all linked specifically with individual SDGs. And so I think development finance broadly has a critical role to play in addressing the SDGs, partly because obviously we have money available, and a lot of these challenges have to be solved, we think, through sort of private sector, to a large extent through private sector intervention. So we have a role to play, and we also, as we talked earlier about mobilization, have an important role to play in mobilizing capital. But I think we have a review in New York later this year, and of where we are in the SDGs, and it's not going to be a pretty picture. I mean, and particularly for Africa. I mean, I think where you look outside of Africa, maybe the story might be a little bit more encouraging. But when you think about Africa, fastest growing population in the world, certainly the largest distance to travel. I suspect when leaders come together in, I think, New York later in the year to discuss where we are, they're going to highlight that this is still a major challenge.
Yeah, I think one of the things I've definitely noticed in this area over the last few years is, because of other global economic challenges, the SDGs haven't really been talked about so much, and I'm just starting to see it re-enter discussions again. It's and hopefully that will bring some further momentum around that. I think that's probably all we have time for now, and I think it's exhausted nearly all of the questions that we have. So if you do want to continue to engage with us, please do follow up with the team. We're always happy to answer questions and to try to engage with our partners as much as we can. And thank you very much to Nick and Diana for answering and being put on the spot like that for us. So that concludes the first half of our event. I'll now be handing you over to Colin Buckley, who will be chairing the panels for the second half. But before I do that, we do have another short film about another company that we invested in 2022, which is AgDevco. AgDevco was founded by the UK government with a mission to invest in small and medium-sized agribusinesses in sub-Saharan Africa. Let's take a look.
We appreciate what the technical assistance they brought to us. We appreciate the finance and the capacity and the facility also to work with them, their flexibility as well, and their support.
We're really very pleased to have BII as an investor in AgDevco. We'll be using the capital to continue to grow our portfolio of early and later stage investments into high impact food production businesses that operate both for export, such as macadamia, avocado and horticulture, but also in local markets, for example, in poultry and in fish production.
Good morning, everyone. My name is Colin Buckley. I'm BII's Managing Director and General Counsel. And earlier, I had a chance to discuss BII's focus on development impact with a panel made up of Liz Lloyd, BII's Chief Development Officer, Amelie Ammon, who is our Head of Climate, Diversity and Advisory, and Maria Smith, our Head of Development Impact. Here's how that discussion went. So Liz, 2022 was the first year of our new 5-year strategy, and a keystone of that was our new approach to impact and our new impact framework. Can you briefly remind us about how that framework works?
So we defined 3 development objectives which guide all of our investments now. They are investments that are productive, sustainable, and inclusive. We also introduced a new scoring system which allows us to make an anticipated assessment of how much impact there will be, and we embedded impact further during the entire life cycle of the investment process.
And can you give us maybe an example of the type of investment that we're making under this new framework?
Yeah, so if you think of productive, those are investments that help raise the productivity of an economy to allow a decent standard of living for all. An example might be digital infrastructure, having access to the internet for goods and services. And you can imagine in a country like Nepal, only a quarter of the population have access to affordable broadband. So there's a company called WorldLink, and in 2022 we invested in them again, and they have an aim to get to reach 1.3 million customers, and most of those will be outside the capital, Kathmandu, and you can imagine how difficult that is. And in doing so, they will raise the number of jobs that people they employ from 5,000 by an additional 1,000. So that's the kind of productive investment that we're making.
Yeah, that's really extraordinary. Emma Lee, so you lead the team that focuses on the sustainable and inclusive, if I've got that right. And I was wondering if you could give us an example of how we change our approach on sustainability and the type of investments that we're doing under that part of this impact framework.
Yeah, thanks. So the S really refers to primarily our climate finance and how we have been increasing more in climate finance investments. And actually last year was a really strong year for climate finance. We came out around 46% of our commitments last year. But I think also very importantly, it's not just about commitments. I think last year we also saw some really interesting projects starting to come online, particularly in Pakistan, where we saw over 400 megawatts of renewables come online. So really providing hundreds of thousands of people, particularly residential consumers, with renewable powered electricity. So, that's also obviously really important to recognize. In terms of how the S score has helped to drive, I think it's very clear that it's had a very positive impact in helping build understanding around what climate finance investments really are, and maybe what they're not as well. And that is a big part of how we've been working with teams and potential investees. But we've also, last year, we agreed our new net zero transition strategy, which I think is really important because that also is about not going beyond just climate finance investments, but looking at how all of what we do is aligned with the Paris Agreement, the goals of the Paris Agreement, which is net zero, but also climate resilience. And I think the other key area of progress that is really, really important for our markets is the focus on adaptation and resilience, and how we can both invest in companies that can bring adaptation solutions, services, new technologies to other sectors, to communities, but also importantly how we ensure all our investments are resilient to the changing climate, how we integrate climate scenarios.
I mean, often when we think about climate finance, we naturally think about renewable energy, but this focus on adaptation and resilience is a particular focus that you and your team have been promoting. And I wonder if you could give some more color or examples of what we mean by an investment that focuses on climate adaptation.
Yeah, so I think, as you say, it's not so well known, particularly in terms of what kind of private investments support adaptation or can deliver adaptation services. But we've been investing in a number of companies, particularly they're quite early stage. So our venture capital team in particular have been coming across some potential investment opportunities that are able to bring quite innovative solutions to farmers, for example. So the ag tech space that actually often is combined with the fintech. I mean, we hear a lot about ag tech, fintech, but not necessarily considering how they can actually deliver adaptation. And so a number of companies in India, in Africa, particularly in Kenya, also in Nigeria, where we're starting to invest in those. So a really important part of what we're doing, and we know there's a long way to go still. And we need to build out the capabilities, including, I think, what was really, for me, one of the best events or initiatives of last year, where we brought together all our fund managers, but also some of their investees, to provide them with training around what an adaptation resiliency type of company could be, so that they themselves are starting to identify those opportunities. Really important, and the beginning of a journey, if you like, but hopefully something that will really deliver great impact for more resilient economies and communities.
So thank you. So I think that leaves us with inclusion, Maria. And as I understand inclusion, it's really kind of focusing more on low-income communities and fragile and conflict states. But could you flesh this out? I mean, how does inclusion factor into our choice of investments now?
Yeah, I mean, through our impact score, we've really been able to refine how we consider inclusion within our investments. And there's a number of components, and one is actually around gender and diversity. But then to your point, a big element of it is around low income. So when we look at low income, we consider it from a country perspective. So we have classifications that look at where macro elements like GDP and poverty gaps at a country level. But then we also consider within different countries, where there's pockets of poverty that need to be addressed. But then also we look at investments that target directly low-income populations, and that could be through jobs and livelihoods. It could be through goods and services that directly benefit those communities. So an example from a country perspective, an investment that we made in 2022 is the Dal Group, which was our first investment in Sudan, which is a large food and ag business in the country. And also from a livelihoods perspective or a low-income population perspective, we invested in Akshayakalpa. The CEO will be speaking in a little bit, but that's a business that supports farmers in India.
I understand that some of the investments get this enhanced score around inclusion, but aren't all of BII's investments intended to focus on poverty reduction?
Yeah, that's right. I mean, the need is great in all of the markets that we operate in, and many of the investments that we make have a systemic impact on poverty eradication. Indirectly, though. So, if we invest in large-scale grid investments, if we do SME investing, if we do digital infrastructure, there is a systemic impact on poverty, but it's indirect.
Thanks for that. But I know that there's more to impact than this new impact framework and this new scoring. So, for example, Liz, I know that there's a whole aspect to making an investment around business integrity and ESG. Can you give us some kind of sense of how that factors into the development impact of an investment?
You're absolutely right. How we, as a responsible investor, make our investments is absolutely critical. And how we build partnerships and how we build the ecosystem is also critical. So we launched a new policy on responsible investing, which covers all aspects of environmental and social governance and business integrity, benchmarked to solid international standards this year, and have implemented that. And for example, we have continued with the trainings to our GPs, our fund managers, to raise standards. And we've also entered into a very interesting partnership with Transparency International to think about business integrity as an impact investor and the benefits of having good standards to tackle corruption, but also to further our impact objectives. So those are some of the aspects that we think about when we're making all of our investments.
Right. And Emily, Maria talked about inclusion, but I know that inclusion is more than just poverty. I know that there are other aspects to inclusion, and one of them, which has been a traditional strength here at BII, is around gender. Can you give us some sense of where we've moved on that part of the strategy.
Yeah, thanks. So, yeah, gender has been obviously a core part of how we've been really driving impact and helping to create better opportunities and particularly more good quality jobs for women across our markets. And we have a range of really, I would say, very innovative investments in our portfolio. We're working with, for example, the Cash Foundation in Pakistan that provides microcredit to women to help them build out their businesses. Importantly, bringing technical assistance as well to help those women set up their businesses. Another one in India, Better Place, which is also building out a lot of capacity for women to be able to establish their companies. And then I think another, which I think, again, it going back to the previous point, with our technical assistance program, BI Plus, working with Advans to help build their understanding of climate risks across their microcredit networks. So really important that these small finance corporations are able to understand how climate risk may be impacting their lending, but also, obviously importantly, their clients, and what they can do to actually start to address some of those potential climate risks.
So Maria, it sounds like we've actually learned quite a bit, but it is just the first year of a 5-year strategy. So I'm going to ask you the kind of the forward-looking question, which is, what do you think we're going to be learning in the next couple of years of this strategy?
Yeah. I think this year has been quite exciting because we have the first year under our belt of the impact score, right? So we have this really rich data pool that we've been using. And what I've really realized is the power of the data analytics to inform investment decision making and asset allocation and how we can just be smarter impact investors because of it. So we will continue to build on that, and we'll get richer data. I think especially as we move into a world where we're going to start to do post-investment rescoring, and we'll understand better the direction of our portfolio. So I'm looking forward to seeing how we can make more informed decisions.
So thank you very much. And it sounds like we've made some pretty considerable first step in this 5-year strategy. But thanks for Maria to give us that look ahead, because it sounds like next year we'll have even more lessons that we can share. And hopefully you'll be able to join this panel next year when we share those lessons as well. Thank you. So our next panel focuses on development impact from the point of view of our investees. Here at BII, we always remember that we don't create development impact. Rather, it's the businesses that we invest in that create that impact. And today on our panel, I'm joined by the leaders of 3 businesses who will talk about their companies and the impact that they're having. So I'm joined today by Chanda Chimakatonga, who is the head of client solutions at the Zambia National Commercial Bank, or Zanaco. Welcome, Chanda. I'm joined by Tosin Enyolorunda, who is the founder and CEO of Moniepoint, which is a fintech platform aimed at African SMEs. And I think in 2023, Moniepoint was the 2nd fastest growing company in all of Africa, so quite an achievement. And I'm joined by Shashi Kumar, who is the co-founder and CEO of Akshayakalpa, which is India's first organic milk company. And it aims at increasing the wealth of sustainable farming and of small farmers. So welcome, all of you. My first question, if I may, is to you, Chanda. I mean, Zanaco is one of Zambia's leading banks. And I'd be curious to hear a little bit about the company and about what your mission is.
Thank you, and thank you for having us as Zanaco. My CEO, Mukwandi Chibesakunda, would have loved to be here. Unfortunately, she's attending an in-person event, and it has taken longer than we anticipated, but we are excited to be here and to be part of this panel. So maybe just to give you a little bit of insight on Zanaco and who we are. So we are a homegrown bank in Zambia. We were established by the government of Zambia in 1969. And the main aim of our establishment was to cater for the financial requirements of the Zambian economy. In 2006, we went through a privatization process, and we're now owned by an investment company called Arise BV, and they sit with a stake of just under 50%. And the rest of us is owned by the Zambian government under the Industrial Development Corporation, that's the IDC, which has 25% of Zanaco. And the rest is free float on the Lusaka Stock Exchange. So over the last 54 years, we have made significant progress in establishing ourselves as a prominent financial institution in Zambia. And we've actually earned the title as the People's Bank. And that's because we cater for the average Zambian, and not just the businesses, but the individuals as well. So our dedication is to foster the growth of our employees, our communities, our businesses, and our country as a whole. So we're pretty much driving the growth of the Zambian economy. We're also the biggest bank in Zambia, the largest bank in Zambia in terms of balance sheet, profitability, footprint. We are across all 10 provinces of the country. And yeah, that's pretty much who we are. We are proud to be one of Zambia's leading commercial banks with a very strong record in terms of generating revenue and profitability. Our extension in terms of our branch network spans across the entire country. We've got 62 branches and we've got 30,000 agents. I'll speak to that later on as we go along. So our commitment is to providing support to various sectors in the country. We've got key growth economic sectors, and these are mining, energy, agriculture, tourism, trade, and SMEs. So SMEs for us is very, very critical, and not only for Zanaco, but for the country as a whole. As a bank, we have prioritized SMEs, and we continue to do that. In Zambia alone, just to give you a few statistics, SMEs make up 90% of all businesses in the country, and they pretty much cater for 80% of the working population in Zambia. So this is a very, very vital sector for us, and it's pretty much driving the economic growth in the country.
Thanks a lot, Chanda. And could you perhaps talk a little bit about the partnership that you've had with BII and how we work with you to sort of achieve that mission that you talked about?
Yeah, so I think we've had a great relationship with the BII over the last 6 months. So considering our strong dedication to supporting the SMEs, which I just spoke to a few minutes ago, the BII investment has helped the bank significantly. So we currently have 2 line facilities with the BII, one for SMEs and the other for climate finance. And these are 2 very critical sectors for us, driving economic growth in the country. So we're only 6 months into the facility, but we have already seen great results. The SME line has helped to build our loan book. Notably, the SMEs, for the SMEs, our business loan book has increased by 10%. And this is very significant growth since the start of this relationship with the BII. So we actually have doubled our loan book in several of our SME subsectors and subsegments. And we continue to do this as we go along. I just wanted to give you an example of the impact that we're making with this partnership and with this facility with the BII. So with the assistance of this facility, we were able to provide entrepreneurs with working capital to support with agency banking. So I did mention earlier that we've got 30,000 agents in terms of our agency banking. So agency banking is pretty much our agency booths that we have cut across the country. And they really help us to bank the unbanked, and to be in the far-flung areas where we can't put brick and mortar branches. So what this facility has done for 2 of our SMEs is we provided them with working capital for them to be able to invest in approximately 20 agency booths. And these are cut across the country, and they're providing jobs. So we've estimated that each booth provides employment for 3 youths. So just with this partnership with the 2 agents that we've supported with the agency network, we provided employment for 60 youth. And this is just an example of the 2 that we've supported. And we've got so many examples of the impact that we've had with the BII with this facility. So the area of focus for us has been significant, and we've focused quite significantly on the SME business. Going to the climate line, I did mention that we have two lines. There's the climate line and the SME line. So going to the climate line, so the climate line has been very interesting for us because this is pretty much a fairly new topic in Zambia. With the new government that came into power about 2 years ago, we actually do have now a Ministry of Green Economy and Environment, and we work very closely with the Ministry of Green Economy and Environment. So the climate line has been instrumental in supporting the bank's expansion of our green portfolio. And what we've seen is with the recent announcement of our partnership with the BII, we've had a lot of our customers coming in just to ask questions in terms of how they can benefit from the facility. But we have noted some challenges, and what we're trying to do is turn these challenges into opportunities, because we still want to be able to solve for our customers. So there are opportunities that we've noted, and we've interacted quite a bit with our customers just to understand how we can help them and how we can support them. So what we're doing right now is we're working on sessions with our clients to provide them with valuable insights on the criteria for being an environmentally friendly organization. And this has really helped us, because now we're focusing on conducting SMEs capacity building and giving them knowledge on climate change and on practices and projects that they can embark on. So we have an active pipeline in terms of the climate space, and this is being converted, and we have set ourselves internal targets that we're working hard to accomplish as we prioritize this climate change and the fact that we need to deliver in the green portfolio. So our journey towards adopting more environmentally friendly practices continues, and we're greatly appreciative to the value and the contribution that has been made by the BII with this collaboration. And yeah, we continue to look forward to working with the BII team.
Great, thank you very much, Chanda. And I think we'll come back to some of those themes of SME and climate as we talk more. Shashi, I mean, you've founded India's first organic milk company, but I know, looking at your CV, your background is actually in IT. So in 2010, how did you end up founding a milk company?
Well, thanks, Colin, for the prompt. I think what is happening in India right now, so I was born in a farming family, and my father never wanted me to be a farmer. And it is not a one-off incident in India right now. And everybody in farming, they are getting out of farming and getting into information technology, getting into other areas. So if you ask a question, a smallholder farmer, 2 to 4 acres, my father had 2 acres of land. He never wanted me to be a farmer. So that's exactly how I got into IT industry. My dad wanted me to be there, not that by design I wanted to be an engineer. So this is the status of India right now, especially farming is concerned. We at Akshayakalpa, what's happening is we are trying to actually change that pattern. How my father had a role model engineer in Bangalore. We are trying to create a role model farmers in each village where we are going. So right now we work with around 1,000 farmers in exactly 1,000 villages, and we have taken their economic position to a substantially higher scale, so that entire village can look up to them, and start taking farming positively. If they graduate, we want to have an option, farming as an option, just not a doctor, an engineer, or an accountant. We wanted them to be farmers as well. That's what we are doing in Akshayakalpa, working with smallholder farmers and trying to change the way the farming is perceived in the country right now.
So are you trying to get more people to actually return to farming? You're trying to reverse the kind of advice of your father. I mean, there must be some significant challenges to kind of turning your back on IT and moving into farming. I mean, what have you been doing to assist that kind of remigration?
One of the biggest challenges, Colin, right now in Indian context is economics of a smallholder farmer. it doesn't really add up. In fact, none of the smallholder farmers make money. So that's exactly what it is. What we have demonstrated over last 13 years of our existence is we have proved smallholder farming is profitable. And what has that enabled is the young people who are leaving farming now considering farming very positive way within the village ecosystem. So what we have done is we have taken them into a dairy, enabling a regular cash flows. And also we are using the dung coming out of a dairy ecosystem to do a lot of soil-based work. Technically, Akshayakalpa is a farming company. It's not a dairy company. Dairy is one of the interventions. If you go to any of the Akshayakalpa farms, 4 to 5 economic streams, be it backyard poultry, be it banana, be it tender coconut, be it dairy, so be it mushroom growing, be it beekeeping. These are some of the things we have engineered into these farms so that they have got large economic streams, and also very good base for soil management. So this is exactly what it is driving the youngsters to take up farming, because it is sustainable, so it is repeatable, and they're able to see the income month on month. At an average, Akshayakalpa farmer today, they are earning average 100,000 Indian rupees per month. That is substantial money, when compared to what they would have been earning going to cities and towns, being cab drivers, being watchmen, being a lot of things they used to take up earlier.
And Shashi, could you share a few words about how BII has helped you in this effort?
One of the biggest plus points for us in July 2022 when we raised money from BII is the work what we are doing is on two fronts. One is a smallholder farmer making that economically viable. So we want to prove that it is economically viable. Second thing is the amount of work we were doing on soil and trying to climate proof the entire farms. I think not many investment companies understand this kind of work. So while we are a for-profit company, but the work what we were doing was a very farming, making farming viable. I think that is one aspect, which enabled substantial money infused into the operations, to develop the market so that more farmers become inclusive. That's the one fundamental part. The second part is we face a lot of issues, especially in the farmer financing. So the BII coming in, and pitching in, hey, you know what? We stand guarantee for some of the loans extended to the farmers. Let us do a pilot on that. So now we have started piloting a lot of farmer loans, backed up by BII guarantees. So that has really enabled us to take our operations to next level, Colin.
Thank you, Shashi. Tosin, let's talk about Moniepoint for a little while. I'm curious, what was the principal driver for that, and why is it growing so quickly?
Thanks. So Moniepoint was set up to help small businesses get access to banking services like payments, credit, access to business tools like bookkeeping and accounting, as well as forex payments. And we actually started business in 2015. But between 2015 and 2019, we're building software solutions, and we pivoted in 2019 into the direction that Moniepoint is building now. And in 2019, we noticed that a lot of small businesses, based on the experiences that we have had building small software solutions for the banks, that a lot of small businesses are really underserved with respect to payments and other banking services. And we launched a payment solution, point of sale payment solution. And it's started growing really fast since then. Initially, we started by 7 agents, as in cash in and cash out agents. And we expanded the solution to service regular merchants also. And now all forms of businesses, including regular merchants, agents, and other businesses also. And I think one of the reasons why we've grown really fast is, one, our solutions just hit the right spots with respect to the right mix of the products and the need people had for it. 2, the right pricing mix, that it was also affordable, not cheap, but also affordable for them. 3, we had an excellent distribution method that can actually penetrate to some of these local and deep places in the country that prior to now are not easily accessible. And because of that, the right mix of digital solutions that are being sold locally allowed us to go really, really fast. And right now, people just use us as businesses, just use us like their bank. They accept payments through point of sale devices, or they accept payments through bank transfers and mobile transfers, and they keep their deposits with us. And from there, they can get access to loans, small loans, mostly working capital loans also. And from there, they can also have access to bookkeeping tools. And from there, they can also have access to Forex payments. And we think this is also something that's very important, because small businesses make up the majority of GDP of emerging markets, specifically in Nigeria, well over 50%. And we are also currently doing international expansions beyond Nigeria also. So the solution hit the right spots, and the markets rewarded us awesomely, and that's one of the reasons why we've grown really fast.
And someone on your staff described your mission as promoting financial happiness, which I think is a great term, but what does that mean for you, this kind of notion of financial happiness?
Yeah, I mean, it's exactly what it's saying. How can we make people find happiness financially? And I think that, I mean, like we all, from all kinds of cultures and religion that we all do, we all believe some form of positive feeling is one of the major reasons, one of the major things we should seek while we are alive, from happiness to fulfillment to contentment to peace. We give it all sorts of names, but it's just saying that there's a universal goal for all humans to find positive feelings through our lives. And I think in my time, and in most people's time, we realize that money is an important way to find that happiness. Either we really want to agree or not. I think money actually helps you find a little bit of that happiness. And I think there are some religions that teach you, very hard to reduce your expectations of money, such that a little amount of that money will make you find more happiness, but it's still the same direction. So I thought it was a universal goal. It was noble, and helping people find happiness in life financially is something that is pretty universal and worthy of devoting my life into. I also came about around when I was growing and, experiencing quarter life crisis, and coming into the epiphany that it's important to be liquid such that your life will not be too hard, liquid hard. So it was clear at that point that I need to find financial happiness for myself, and I should devote my life's work to help other people find it. And the way this has manifested so far is in three sections. 1, our customers. 2, our partners. Partners include our employees and our other partners. And 3, our stakeholders, shareholders. If we help our customers find financial happiness by helping them get them access to tools that will help their businesses and make them grow, this will in turn make our partners, our employees, and our sales partners really happy financially, and also deliver superior returns, sustainable returns for our stakeholders.
Oh, thanks a lot. That's a noble vision. I guess, as your partner, how have we made you happy?
Oh, yeah. First of all, by giving us money. So that was a clear, obvious way. VII invested pretty early, not too early, but at least quite early in the company. And first of all, the money allowed us to accelerate our growth. BII's part of the reasons why we grew very, very fast in the last years were because of some of the investments that we received from DFIs like BII. So clearly, the obvious direct investments allowed us to be able to accelerate our goals. I think another part also that's important to also mention is the signaling of the British international investment in you is a sign of a sovereign backing an important mission and with their money and their brand. So it allows other DFIs to join us. It allows other government authorities to also listen to us because they begin to see us as well managed, well funded, well backed, and corporate governance and ESG expectations are expected to be there because these are typical terms of investments. And this also means that compliance and all other forms of prudential functions are also expected to be there. So the branding that the BII also brought, that also came with the capital investment in us, has also eased our operations with respect to the quality and the brand that's essentially supporting the organization. Lastly, I've enjoyed working with some of the BII staff. I've enjoyed working so much with them that we've taken a little bit more step in even working with one of BII staff permanently as they joined us, and I'm even working with some of the other people managing our portfolio in the organization, and I enjoy the relationship a lot. I actually even had dinner with one of them 2 days ago. So in addition to finding financial happiness monetarily, brand-wise, I also enjoy the personal relationship with BII.
That's great to hear about, and we always enjoy spending time with all of our partners and all of our investees.
Yeah, thank you.
Chanda, if I could come back to you, I mean, in some of the panel discussions earlier, we heard a lot about what we describe as the macroeconomic headwinds. I mean, here we've got inflation, we have the climate crisis, we've got any number of natural disasters and wars going on. As Zambia's kind of premier bank, how has that influenced Zanaco? I think you may be on mute. Sorry.
Is that better? Can you hear me now?
That's better. Thank you.
Okay, great. Sorry about that. So I was actually saying that I'll start with talking about the country as a whole and how the climate disaster has affected us. So we've seen a lot of change in this space. So the impact has included a noticeable decrease in the agricultural productivity. We've seen an increase in mortality rate for wild animals. And, for us, tourism and the wildlife tourism is really critical for us and for our economy. So that has been a huge blow. We've seen localized flooding. We've experienced horrible floods, including loss of life, not only in Zambia, but with our neighboring countries in the region, in Malawi, in Mozambique, and in Angola, and this has affected us as well in Zambia. We've seen a potential decline in tourism, and I think we're just trying to get our numbers, and this is post-COVID. So COVID, we saw a really significant decline in tourism, and then came climate, the impact of climate hit us really hard, and we've also seen a decline in that space. Our levels of water in the rivers is also reducing. We've seen a potential risk of the Victoria Falls experiencing reduced water flow. This for us is very significant because the Victoria Falls is one of the natural wonders of the world, one of the 7, and it's a key feature of attracting tourism into the country. So this is something that we can't afford to experience in terms of the reduction in water level. And Zambia, like many other countries, I think we've seen the impact of the various geopolitical and the macroeconomic changes around the world. The ongoing conflict between Russia and the Ukraine has had its impact in Zambia. And what we're seeing is commodity prices have been impacted, particularly cereals and fertilizer. And because we are an agriculture country, so we are our economy is predominantly driven by mining. However, the government has been trying to diversify our economy into agriculture. So that's something that we are very keen on. And so we did see an impact on cereals and in fertilizer. So this situation has presented us both with challenges and with opportunities for the agriculture sector. So for instance, the current grains shortage has presented an opportunity for local farmers to contribute to enhance their production, which is great. Because they can come to us for funding, and through the BII funding, we can give the SMEs who are in agriculture funding to grow and produce more. However, this has also, what has hit them negatively is the price of fertilizer, because now the fertilizer prices have gone up. So that has had a negative impact. So at macroeconomic level, we've also seen the increase of interest rates. So this is making borrowing in the US dollar prohibitive and quite expensive. However, this line of financing from the BII is important, especially for capital project financing. So high global interest rates are also impacting the bank through our third-party lines. And this is hindering the bank from providing low-cost financing to our customers. And this has actually been a national cry, not only by our ministers, but also by our head of state, who is constantly just echoing those sentiments in terms of having to lower the cost of borrowing in the country.
All right, thank you very much. Shashi, maybe to pick up on this kind of theme of climate, because when we think of climate, we often think about climate finance of large renewable projects. But actually, a business like yours, an agricultural business, can also both feel the problems of climate and address them. Could you speak a little bit about how you've been doing that?
I think one example I can give is, Colin, the previous year, generally we receive rains between 500 millimeters to 700 millimeters, okay, per annum in our operational area. It is a plains. So last 2 continuous years, okay, we had rains excess of 1,300 millimeters. So it's a clearly a shift in rain patterns. So that has really impacted some of the agricultural activities, okay, where we are involved in. But in this kind of situations, this is a situation we have to face, okay, and I believe we don't have a direct control over, okay, what's happening on this one. But is it possible to prove our farmers, prove our farming, okay, into these kind of changes, okay, especially dairy, okay, especially production of, okay, beekeeping, especially production of, okay, banana, especially backyard poultry. All those things can be significantly shielded from some of these activities. Okay, I think we, with the right market opportunities, what we have seen is climate issues are inevitable, but the way we do farming, we have to change. So if we don't change, I think probably we'll end up saying that, hey, you know what, climate change has impacted livelihoods. Climate change has impacted the way we do farming. So, for example, the work we do on soil management and trenching and bunding, it has to really change, okay, to suit the current climate issues. We should start creating additional revenue streams for the farmers. Backyard poultry, so might give a good 7,000 to 10,000 rupees monthly income, okay, to the farmers, okay, additional income. So dairy, we have taken income levels from 5,000 to 6,000 rupees to close to 100,000 rupees, okay, on a monthly basis. So even let us assume climate is going to hit you, 50% of those revenues, they are still sustainable. So this is exactly what, okay, I believe climate is giving, and climate issues are giving an opportunity to reinvent ourselves to do farming in a better way. The second point is purely from a, okay, market point of view. If we don't make, okay, decisions right now to us to become economically sustainable, one is livelihood. Second thing is economics, okay, when the climate hits you very hard. So therefore, it is very important to sensitize our consumers. Hey, you know, this is what the farming system is going through, okay, and your traditional model of commodity, okay, our traditional understanding of a commodity which you understood has to undergo change. Please come down and spend some time with farmers, understand those issues so that you can put appropriate pressure, okay, create a pressure groups, okay, within your ecosystem, be it your local politician, okay, local farmer groups, supporting, let me say, farmers as a group. So these two, we believe we are able to crack, okay, in terms of using this as an opportunity to educating consumers and also ensuring that the entire farming ecosystem, the way we do farming, okay, is changing that column.
So that's great, Shashi. I mean, maybe we should move from some of the challenges to some of the solutions. And Tosin, let's talk a bit about fintech, because I mean, originally fintech was thought of as being, you know, the particular purview of Silicon Valley, of New York, London, and Frankfurt. But recently, this type of digital innovation has held a lot of promise in emerging markets for addressing issues of smaller businesses and smaller companies. Can you talk about that, some of the promise that digital innovation holds in our markets?
Yeah. So digital innovation essentially means new solutions that allow us to be able to do things easier, faster, cheaper, oftentimes electronically, right? So, and what this generally leads to is efficiency in doing things. Things that would have taken, you know, a day or two now take minutes and seconds. This leads us to also faster connectivity. It leads to cheaper services and leads to more efficiency, essentially. And what this essentially means for us in the emerging markets is essentially, you know, sustainable growth. That's what it essentially means. It means that instead of, you know, dealing with cash, now there's now prevalent of digital payments. Cash, we all know, is more expensive, and that generally leads to savings that eventually trickles down to the consumers. This means instead of, you know, physically going to see people, now you can make phone calls, you can make FaceTime calls, and this reduces the carbon footprints that would have happened if you were to drive down to see these people. And also, it's certainly generally cheaper paying mobile tariffs than transporting yourself physically. So essentially, the common theme, another one, for example, would be telemedicine. Now you don't actually have to travel to see some specialists. This can be given virtually over the phone, over some internet device. And all this, what this leads to is basically efficiency that generally leads to sustainable growth in the future. And when you have reduced, when you have increased efficiency and reduced waste reduction, and there's waste reduction, what you have generally is savings, so more disposable income to people. This leads to more inclusivity generally because the cost of accessing some of these services goes down. You don't have to pay thousands of dollars to get some of these services. It now trickles down to more people in the emerging markets. An example, for example, now is in Africa, you now have low-cost devices. In Nigeria specifically, you have low-cost devices that cost less than $50 that are mobile phones, full-fledged smartphones. And with that, people can get on Facebook, they can get on Instagram, get connected to the global world. And from there, they can learn about information, learn about diseases, learn about their health, improve their lives. From there, they can actually get much more educated, get access to materials that are prior to now only available to Stanford or Harvard graduates. But prior to now, if it wasn't digital, in emerging markets, the only option that they would have had was to physically travel, and many of them would not have the opportunity for such. So digital innovation essentially leads to easier, faster way of doing things, and this leads to inclusivity and leads to a sustainable future. And I am excited to be one of the people pushing digital innovation in mobile payments and in mobile banking. Like I said, the theme of what Moniepoint is doing is giving access to SMEs. If it was classic banking, we will probably not be able to do it because we'll not be able to set up branches in every nook and cranny of the country. But our solutions are also available digitally. And because of that, even the smallest trader can get access to our products and receive payments digitally, get access to credit. So essentially, digital innovation in emerging markets is essentially making the world a global village.
Let me ask you about one particular feature of digital innovation, which is for SMEs. As I understand it, it moves them from the informal sector to the formal sector. And can you explain how that happens and more importantly, why that's important in countries like yours.
Yeah. So let's give an example of an informal trader that deals in kola nuts. They sell kola nuts in the northern side of Nigeria. And prior to digital solutions like ours, the kola nut seller would have gone to buy kola nut in bags from the farm and come to the market to sell. And in selling, they accept payments via cash. And when they receive the payments via cash, they make profit from that. They go back home, keep the cash in their room. The next market cycle, they take the cash plus profits, go buy another kola nuts, and comes back to repeat the cycle all over again. Now that's informal economy, but a much more advanced, in a formal economy, such a kola nut trader or such a trader would have been able to have access to a digital payment solution that will allow them to pay for the goods without going physically there, and they'll get those goods delivered to them. And in their stall, customers will come, pay them for the kola nuts that they're selling, receive it in their bank accounts, and they also don't need to leave, essentially leading to more efficiency because you now recover time to do more things, spend with your family, or even have more entrepreneurial endeavors. Now,
financial happiness, right? Got it. Okay, thank you very much. Shashi, I wanted to pick up with you. You know, in the last panel, there was a talk about inclusion and a talk about kind of a focus on gender and a focus on the poorer parts of economies. And I'm wondering, I think in your business, you actually touch both of those types of inclusivity. And if you could share a little bit about how you do that.
So I think one of the, in a smallholder farming economy, okay, like India and also the farmers whom we deal with, 80% of the farming work is actually done by women. So, but they never get to make economic decisions on what needs to be done, how the money needs to be spent, okay, how the household is being run. So what we do is around 33% of our farmers, out of 1,000 farmers right now, around 300 plus are women farmers. And what the power it has given to them is, if you really, we have done a lot of surveys with them, amount of savings they are doing in their, okay, households has really gone up. Assets what they have created really gone up. And how the farming is done, okay, is exceptionally better than how the men would do. So what we have seen is enabling them, okay, with, okay, capital, okay, at least whatever the produce, the output, if it is going, okay, to the women farmers, okay, it has substantially, okay, enhanced the way the farming is done and giving the due credit to especially the women farmers. The second part is, okay, as an organization built up over a period of time, what we have realized is we need to really get women into especially companies like ours where we work with a lot of agrarian systems, okay, get people in the back end, we're working with farmers, women into decision-making positions within the organization. So this is one area where, okay, we are really fortunate enough to get a lot of women, okay, into positions where they are making decisions. We have got extension officers working with farmers to be women, the people who are running the plant operations to be women, the people who actually were doing, okay, HR management, administration, everything, okay, being run by women. So this is exactly what we see, okay, an opportunity, okay, working with farmers and enabling women farmers, and similarly, getting the same people coming from the same rural areas, getting into decision-making positions, especially the women.
Great, thank you very much, Shashi. We're coming to the end of our time, but I think we have time for one more very short question to each of our panelists. I'm going to ask you all to take out your crystal balls. And this is the question. Looking ahead 5 years, what type of impact do you think your business is going to have 5 years from now? And if I can start out with Chanda, please.
Okay, so crystal ball right in front of me. That's interesting. So I think Zambia is currently implementing certain requirements as part of its efforts to facilitate progress. And this is evidenced by our debt restructuring program. So we recently restructured our debt of $6.3 billion. And this program pretty much aims to provide financial relief to the country. And it will pretty much allow the country to allocate resources to a number of important sectors in the economy. And I think as private sector, we will definitely benefit from this. I think there's huge opportunity for further partnering, even with the BII, as we focus on particular sectors that will impact growth in the country. So we've also observed that the government is actively prioritizing support for SMEs through a range of interventions. One notable intervention is the youth empowerment, and that's a program that we as NACO are fully fledged in terms of supporting the government, and that's something we'll continue to do. 50% of the Zambian population is young, and that's the youth. And I did mention earlier that 90% of the businesses in the country are SMEs. So there's a huge opportunity there for the bank and for further partnering. So investors such as the BII may find it beneficial to consider opportunities in youth empowerment, in green projects in Zambia, because this is critical. Renewable energy in particular holds a great potential in Zambia, especially in light of the past droughts that I spoke about earlier. And these have impacted our hydropower production. So that's critical for us. Additionally, smart agriculture. So climate smart agriculture is quite critical and an area that we would like to partner with for BII to explore potential and further investments. So that's something we are keen on. Technology and science is something that's fairly new in Zambia. I mean, it's something that's of importance with the new government, and we do have a recently formed Ministry of Technology and Science. So that's a space that we're looking to explore. We do know that.
Okay, I'm going to break in there. I think that's a great list for us to work with. So thanks for that. But let me move to Shashi. Shashi, your prediction.
So what we would like to really see, as I mentioned, the controllable, we would like to really see around 10,000 farmers whom we engage and prove, okay, at a scale that a smallholder farming is viable. So that's what I would like to really focus, okay, next 5 years.
Fantastic. Thank you, Shashi. And finally, Tosin. Tosin, I think you're on mute.
Yes, in the next 5 years, we would love to be servicing tens of millions of customers. Right now, we only service 1 million. We'd love to be giving them access to payments, credits, banking, business tools, and FX tools across multiple countries.
All right. Thank you very much, Tosin, and thank you to our entire panel. It's always inspiring to hear about the impact that our investees are having in our markets. But now, to wind things up, let me pass it over once again to Nick and Diana for some final comments.
Thanks, Colin. So let me just leave you with two things I wanted to say. I think, first of all, I wanted to encourage everybody. Well, thank you all for listening, but I wanted to also encourage you to read the annual review. I mean, I'm always struck when I go through the pages of our annual review, just the sheer scope of and the number of activities that we're involved in. And we've tried over the last couple of hours to give you some sort of taste for that. But I think if you take the time to read the annual review, I hope you'll be struck as I am just by the sheer volume of activities and hopefully the difference that BII is making in all our markets. And secondly, would just like to thank everybody. Particularly, I'd like to thank all the team at BII, all my colleagues who have appeared on the screen in the last couple of hours, all those colleagues who are behind the scenes who put this event together. So thank you all very much. And also, of course, to our, as Colin said, to our last panel, really it is meeting the people who run the companies that we invest in that really gives you I think the color and understanding for what we're doing. So it was great to have them, and thank you all very much.
Thank you all who joined today for your time. I hope the last couple of hours in particular have given you a sense of what we do and why we're so excited about it. To me, it is always the most uplifting part of BII to be able to engage with, to see and hear from our investee companies. And I think you have a sense from those panels of the extraordinary impact that they can have in their markets and the reason why this area of investment in development finance is so important. As Nick said, if you read the annual review, you'll see that this is just a snapshot of the work that we can engage in together. And finally, a big thank you to all of you online. You are our partners, and we have worked with you across a range of different areas. You've worked with us to generate that impact, and you've scrutinised us and kept us on our toes. We're looking forward to continuing that engagement to really double down on the development impact we can have across these markets. Thank you again for attending, and good day.